Hello everybody, welcome to another weekly market news. Today is Monday, 14th of December, and we are beginning one of the last weeks into the end of the year. Obviously, the volatility at the markets is sometimes unexpected. Sometimes there is no rational explanation to what's causing the extra volatility at the markets. But as we can look at the recent days and the recent events that are happening at the markets and might affect the market until the end of the year, it's beginning a little bit more obvious, but still the moves on the markets are quite big. As we are looking right now at the S&P 500, we can see that we experienced at the end of the last week three sessions that end up in red, which was caused mainly by some developments about the Brexit, which we'll talk about in a second. It's probably the major news for also this upcoming week, as we are not expecting any significant macroeconomic data. So this was mainly some type of combination from Brexit, other risk factors that came back to the markets, and obviously there is still the fiscal package stimulus negotiations, which are kind of struck right now. We will see how it will develop in this week, but last week looked like it's probably going to get extended. The deadline is going to get extended by at least one more week. So maybe it will be the same thing about Brexit, because Brexit previously, we can talk about the Brexit stimulus. They also got extended as leaders pledged to go the extra mile. The extra mile, obviously, is something that we heard before. We heard it many times because, as we heard in the last week, Boris Johnson, the Prime Minister of UK, and the negotiators from EU said all the same things, that the Sunday is their deadline, and the deal, the Brexit deal, must get done until then. It wasn't. Obviously, there's still major differences that needs to get solved, and they decided to go the extra mile. So the negotiations continue. It's a huge risk on sentiment for the markets. You can see GBP, for example, how it was able to open this week with a huge gap, buying gap, and continue the surge on Monday. So investors are basically quite optimistic about the possibility that the negotiations are not completely off. They are just right now, they are not going a good way, but they are going some way. So that's what's causing the positivity at the markets. But obviously, we heard it before. We know what was happening before, and me personally, and no one probably is expecting EU and UK to come to an agreement, let's say within few days, as the new deadline is until the end of this week. But it will be extremely hard to go to push the deal through. So we'll see how it plays out. But obviously, this is a major source of some extreme volatility that can come on the markets. We are not talking only about GBP, but also Euro USD was able to let's switch to one daily or 4-hour time frame. Last week was quite okay. We were holding on to 121. We probably will be holding on to 121 this week as well. We will see if some further correction will come at the markets. This can happen if the risks increase a little bit, which can be again caused by Brexit or some other stuff that are going on right now in the markets. So Euro is surging a little bit. The same thing we can say about DAX, at least at the beginning of this week. Last week was quite, we were able to see quite a big slump on Friday. Monday is looking quite good. Also, S&P 500 Monday is looking much better. We still have some major resistance or support areas where we expect the markets to pull back to and possibly pull back to and continue in its surge. But we'll see if we get any chance to test these levels until the end of this year. So stock markets are looking quite good. Obviously, there are some other news that are coming. For example, Pfizer vaccine got approved by FDA for last week. So this is quite a positive news. Obviously, the vaccine is getting shipped out, so the distribution has begun. We'll see if there are any numbers specific, but as I know, there are probably going to be about 40 million vaccines until the end of this year, and until the first quarter of 2021, we should get, or U.S. at least, should be vaccinated by 1/3 of population in U.S., so about 100 million people. Another news about the vaccine, Pfizer's vaccine got approved by UK, so the vaccinating started in UK as well, and also the vaccine by company Moderna should get the approval from FDA and UK regulators and possibly the European regulators maybe this week, and especially until the end of this year. So another positive news are expected from the markets. Let's look at other markets and how they were developing in the past week. USD Cad. Again, we saw something similar at the all other Forex currencies, and that's another fall of US dollar, and which helped other currencies, for example, Canadian dollar, Japanese yen, also Australian dollar, and other currencies by G10. And also quite interesting is right now the situation on gold, as we were speaking about the risks that are on the markets right now and in the economy. It's very likely for gold to continue its fall below 1800 level. We'll see how long it will last until we will be able to test these levels, but you can look at the 4-hour time frame. We can see nice technical analysis, which is double top here. It's a head and shoulders pattern. It's looking quite negative for gold at the beginning of this week, and possibly the beginning of the next month as well. So another fall on gold is expected. We can also talk about oil a little bit, as over the weekend there were some attacks on tanks by Saudi Arabia port, which resulted in a surge of oil prices above 47 a barrel. We still expect in medium term for oil to kind of retreat a little bit. It's massive gains, which are supported by some surge in less than expected rise of production, but obviously the demand for oil and the other oil derivatives is not as good as you would want or you would think that's necessary. So it's also quite negative for oil market, and probably should play its role by the end of the year as well. So we'll see how this thing will play out. Last but not least, let's look at the economic calendar. What we expect this week to happen. On Monday, we do not expect any interesting macroeconomic data. On Tuesday, we have a bunch of data from Chinese economy, included industrial production or investments, unemployment rate, so might get very interesting. Some job data from UK. For the rest of the day, you can see there's not really much that should affect the market volatility. And on Wednesday, a bunch of data from UK, At this particular time, inflation and CPI numbers are not that important for British pound. We have a bunch of data from PMIs from European countries. This will be interesting to see how the economy was able to handle the second wave of the pandemic. From Canada, we have another CPI data. US, some secondary data like business inventories, retail inventories, some PMIs, and some stocks exchange of oil. On Thursday, oh yeah, and don't forget on Wednesday, is that Wednesday, right? Yeah. On Wednesday, there's an FOMC meeting. We were able to see last week from ECB that it expanded their QE program by 500 billions euros. So we'll see how the monetary response will be in the US. On Thursday, there is employment change in Australia. Swiss Bank is having a meeting, as well as Bank of England on Thursday. Some building permits and housing data from US. And on Friday, we expect retail sales from GBP. Bank of Japan is going to have their interest rate decision. There's IFO business climate, retail sales in Canada. So a bunch of quite interesting data. We'll see how the Brexit will play out and how this will affect the market and how the investors will behave for the developments about the Brexit and maybe the fiscal stimulus deal as well and other stuff. So this will be it for today's video. Thank you guys for watching. If you have any question, leave it down in the comment section below, and I will see you next week.